Um, there's another tool that we
Yeah.
have. Yeah, go
Let,
ahead, Chen.
yeah, let me explain this. So News Impact is a tool that we used to use. It's a news aggregator that kind of helps us to get informed with breaking news that's impacting the forex market, stock market, whatever. Like we could have like a tweet from Trump right now, and whatever the tweet is related. Let's say, for example, if Trump tweets something about the deal with him and China, that could affect the S&P 500 or could spill over to the forex market. Um, News like that, they can drop at any time and they will cause the markets to move, or they can cause the markets to move, which is why it's important to understand how to trade news. We will dive into that topic as we get deeper into the program. But in terms of um, acclimating yourself with news and aggregating the news and trying to understand what's moving markets. We don't use News Impact anymore. We've gotten the Ghost Squawk website to like 90% polished to the point where it works really well. So right now we're going to be using Ghost Squawk to essentially aggregate news and use that tool to help you guys trade. So I'm pretty sure Daniel is the creator of Ghost Squawk, so he can speak more about it and show you guys how to use it.
Sure.
Uh,
So that's a good point. Is that as we made our own in-house tools, we're gradually phasing out the tools that we used before, right? Because I can do a little segue on Ghost Squawk really quickly. Let's see.
so
Here.
you guys will all have access to this. So we encourage you guys to go to the website and sign up. This is our website. Like you can actually see our educational stuff on here. But this is our website. We encourage you guys to go on here and sign up, and we'll essentially just explain to you guys how this tool essentially helps aggregate news, and then you can use this as an indicator to help you trade. So um,
Yeah, so we're going to be teaching you off of this tool for basically the duration of the course because this is what we use to trade and how this tool evolved. I wrote it myself because the existing aggregators or any type of news source that you're going to use for trading starts at a minimum of 150 US a month. I believe that's for money.net. There may be other cheaper options now, so I'll try to see. But either way, it was just untenable, right? And there's other options like Reuters, which was 1,800 US a month, and of course Bloomberg, which was 3,000 US a month. And it just was prohibitive for the beginner retailer trader, right? You know, when you're starting out, you don't have that kind of money, and if you learn off of a system that's like that, like some other trading schools will teach you off of Bloomberg and so forth, and then you get to trade on your own. And you're like, wait a minute, I don't have this tool that you just taught me how to use, and so you know, it just becomes a nightmare. So what I did was I wrote a web scraper that basically looks at all of these sources. We're going to go into the specific news sources that we use later on in this very module, but basically it just looks at all of those and it tries to put it, you know, to this nice-ish format. I realize that this still has a lot to go in terms of the aesthetic department, but we basically just made it to do the job. You know, one of the things about me and Chen is we're basically just two dudes doing this out of our homes, right? So it's not going to look as polished as a you know, Bloomberg or whatever, but it gets the job done. And additionally, I'll draw your attention to this up here. This is part of my background is in artificial intelligence and machine learning. So I wrote an algorithm that would basically read all these news headlines and give you a feel for how many headlines are risk on, how many are risk off, and how many are neutral, right? We see that basically right now the risk on and risk off is 9 and 9, so that's equal, so it's coloring it yellow. But if it's risk on, it would be green, and if it's risk off, it would be red. Now I understand that you guys this is your first class, right? So you don't necessarily understand what that means yet, but this is one of the primary tools that we will be teaching you off of. So it's we're going to be referencing it over and over, and we have many modules devoted to the concept of risk on and risk off. And I can tell you right now that this is a very, very valuable tool for you, especially as beginners, because as you learn what risk on and risk off means, it becomes very, very, you know, it's not always straightforward, especially as a new trader, what it means to be risk on and what it means to be risk off and what you do about it, right? So this is a very, very valuable tool just in this alone.
That is a question now. Like, what's the probability of success using that tool to kind of do your trades?
Okay, so probability of success, that's a very good and a very
I actually have a good example right now if you want to.
Sure. Okay, so let's do a new share to you, Chen. How do I do that?
Yeah, so
stop share, right? Stop share.
Yeah, just stop share and then let me share. So
Okay.
this is my screen, guys. Just to answer your question there, Omar. So the Ghost Squawk, what it does is that it reads headlines, right? Can you guys see my screen? Do you guys see the Ghost Squawk?
Yeah.
Yes.
Yeah. So what Ghost Squawk does is it's reading these headlines, and the algorithm is composing. It's composing these headlines into three categories. Are we risk on? Are we risk off? Or are we neutral? Right? And based upon markets, I know this for a fact because institutions such as like hedge funds and banks, they trade the markets based upon a sentiment, right? And the sentiment towards the market's perception could be risk on. So today we're going to take on risk or risk off. Today we're going to take off risk, right? And so you have on positionings in asset classes. So the four asset classes that I like to use as an example here, guys, is up here is the S&P 500 index. Down here is the dollar Japanese yen. Over here is the price of gold, and then up here is the price of the 10-year U.S. Treasury note. Now, all of these markets are highly correlated and impacted by the concept of risk on, risk off. If we were to put a hierarchy or classify assets in terms of if we are risk on, which assets would rally, it would be as such. Okay, so the riskiest asset that you can participate in the market is trading stocks, which is represented by the S&P 500. So on a risk on bid is saying that the market has a sentiment towards taking riskier assets, buying riskier assets. So typically you would see the stock market rally on a risk on bid, right? Vice versa, the other three assets here represent the inverse of a risk on bid, meaning that if it's risk on, gold is going to sell off because no one wants to hold on to gold because gold doesn't give you a return in the market. So gold typically gets sold off in a risk on scenario. The other asset classes typically behave the same way as well. Dollar yen and the 10-year U.S. Treasury note. So you'll have a scenario in which when you're risk on, the stock market will rally, and the other asset classes such as gold, the 10-year U.S. Treasury note, or dollar yen would sell off. Vice versa, in a risk off bid, you'll see gold rallying, you'll see dollar yen rallying, you'll see bonds rallying, and you'll see stocks falling, right? So that's the idea in terms of understanding risk on, risk off in a very short summarized nutshell for you guys. Now let's go back to the GS indicator. So right here, we can see GS. Well, I mean, we just got a new headline here that kind of changed the composition. But if we take a step back, GS was showing us 9 to 9, right? So it was relatively equal in the markets a moment ago. And in an equal risk on, risk off, you typically see markets going sideways because no assets being bought up, no assets being sold off. So if you look here in the market, the stock market typically over the last several hours has typically been trading sideways. Same as dollar yen, same as the bond market, same as gold, right? So you can see the composition of the Ghost Squawk indicators risk on, risk off sentiment showing you relatively balanced risk in the market. And that's being translated in real time as the market's typically just trading sideways right now. As we go out throughout the day, when more news breaks, the indicator will constantly evolve and change to compensate for new information in the markets. And so you can use this to kind of help guide you and direct you in which way you want to trade the markets. It's a very powerful tool. Again, this is the first class, so this is like just a quick summary of it. But we will elaborate on this much more as we go, so you guys can get you guys can get into the sense of approaching the market from a risk on, risk off trading scenario. All right, guys. Does that answer your question, Omar?
Yes, but like you said, we will actually talk more about that in more detail. So
Yeah, absolutely. I mean, like this is the first class, so this is just like a quick summary. But by the time we finish, like a couple weeks ago, we had the Iranian attack, right?
yeah,
Like when a piece of news like that breaks on, you got to know whether we're in risk on or risk off mode. And once you understand that we're in risk on or risk off mode, you'll automatically know gold will do this, stocks will do this, dollar yen will do this, right? If we're risk on, that's what's going to happen. You'll just know. If it's risk off, that's what's going to happen, right? So
But
that's your level of understanding of interpretation of news and how it impacts markets. Okay.
but there's another point that I think really should be made about this. Is it if somebody's trying to sell to you a magic indicator that when it says buy, you just buy blindly, they're lying to you. They're trying to take your money. There is no such tool, right? This is it wasn't designed to be a magic indicator. It will never be a magic indicator, and I would never lie to you and tell you that I could make such a magic indicator. However, what it is a tool, okay? So it's a tool to give you a measurement of the most fundamental concept in trading, which is risk sentiment, okay? The most important question you can ask yourself as a trader when you wake up in the morning and you go to the washroom and you drink coffee and all that and you're reading through the headlines is, are we risk on or are we risk off? And that will drive your trading for the rest of the day. No matter, I don't care if you're trading stocks, I don't care if you're trading options, I don't care if you're looking at the S&P, bonds, oil, whatever. That question and the answer to that question is going to be driving your trade for the entire day. Now, if you have a tool that could help you get a better idea or confirm the idea that you already have from reading the news by yourself, then you have that much more information by which to make your own decision and your own trade. So to say that it's right as in it produces money 90% of the time, that statement has no meaning, right? Because I'm not telling you, oh, risk on, buy stocks now. I'm saying, hey, Ghost Squawk is saying it's risk on, for example, I'm not saying that now, but for example, if the headlines were skewed to the risk on side, I'd be like, look, we're in a risk on mode. You're going to be looking to buy. Now, do you want to buy like way up here? I don't know if you can see my mouse cursor, but up here by.
No, we're still on my screen. Do you want me to pass it back to you?
Oh yeah. Okay.
Okay, let me pass it back to you. Okay.
Okay. Let's try this.
Okay, there we go.
Okay, can you guys see my screen? All right, let's go back here. I think I have a trading view open somewhere. Yeah, here we go. So if Ghost Squawk says it's risk on, let's try to get it back. Okay, so here's where roughly where Chen was here. If it comes on here and it says it's risk on buy, are you gonna buy over here? Well, if you're thinking that we are, of course we have the information in front of us, but the number one thing you want to avoid, we're going to discuss this when we talk about the 50 shades of trading, is that you never buy on FOMO, right? So even if Ghost Squawk is telling you it's risk on, we buy up here, we're going to have to hold as the market retraces, right? So it's not so simple as Ghost Squawk says it's risk on, so buy stocks, right? You want to do it intelligently. Ghost Squawk is a tool. Like Ghost Squawk can still be right in telling you we're risk on, and you could still lose money if you do something stupid. Now, no offense if you do something stupid, because we all do it. We've all been there. But my job as an instructor is to help you learn to use the tool that I've created for you to maximize your gain from it, okay? So I can tell you this, to answer your question, Omar, is that with 100% probability, when Ghost Squawk is telling you it's overwhelmingly risk on or overwhelmingly risk off, it's right. There have been a few times where some news headlines came out, and for whatever reason it caught it on later, so it lagged a little bit. That happens. It's just the nature of the game. It's going to happen. You can't have infinite precision in the markets. And, it's a tool. It's a tool made by a dude in a basement. So it's a good tool, but I'm not going to tell you it's perfect. Okay. That being said, when it tells you, aside from some nuances, when it tells you the market is overwhelmingly risk on or risk off, you can believe it. That's not to say that sentiment will change In fact, Chen and I just did a video, was it last night or Wednesday night, where we discussed some of those very changes that will happen. So you really have to keep on it. But when it tells you it's risk on or risk off, it's usually pretty spot on. And so I don't know if that answered your question, but as we continue in the course with this tool, you'll be actually seeing some of those examples and what to do.
No, that's great. So just to, I just want to just touch one more time on the risk on. When it's risk on, you basically tend to buy, or like how does that on and off?
Okay, so again, the concept of risk sentiment is something we're going to be revisiting through here. So I don't want to spend a huge amount of time on it in this module, but to answer your question succinctly, it's not whether you buy or sell, but it's what products you buy or sell. So when we're in a risk on mode, you want to focus on products that are hungry for risk. Stocks is one of those. Okay, so it would be a buy signal for stocks. It would be a buy signal for certain currencies like the US dollar. And again, we're going to be talking about those a lot throughout the course, so you don't have to worry about memorizing those now. If we're in a risk off mode, that means you buy other products, right? It could mean that you sell stocks or you buy other products like the Japanese yen, for example, if you're into currencies, or bonds. And setting up those trades based on that is basically the focus of this entire course. So whether it's risk on or risk on means that you buy, sell certain products, sell other products. If it's risk off, then basically it's the inverse. Whatever products you bought in a risk on mode, you're going to sell.